Good weekend. Ira Epstein, and here we are with your metal market wrap-up, your weekly edition for Saturday, July 8th, 2023. First announcement. I have a family member that has major surgery scheduled for Monday morning, so I'll be driving out to Indiana first thing, like 3:30 in the morning, and I want to be there with the whole family. I've got family coming in from all over the country. We'll all be together. Fingers crossed that everything goes well. I'll be there. Now, if the surgery is due to begin around 7:30. If I can get free, I will do some of my morning videos and try to get them posted. I don't know. So don't count on me, but I'm going to try my best, especially for the subscribers. But first things first, got to be with the family, and that's what I'm going to do. If things go well, I'll be back on Tuesday. If they don't go well, I don't know. All right, do I stay out there? It's very fluid. So we want to see, this is a scheduled surgery, but it's a big one. All right. What isn't big is what the markets are doing. It's bigger than big in its own way. First off, we had the jobs report. And when I looked at the report, I said, okay, it's doing pretty much what the Fed wants in terms of the raw amount of jobs are small. I wish I could explain to you the ADP number doubling what was the estimate and going to 497,000 when we dropped to 209,000 on the full jobs report. I cannot explain the difference, so I'm not going to try to. The market doesn't look at ADP normally. It got scared because the number was so big, and typically the jobs have been beating recently the ADP number. The U.S. jobs report. So not the case. Are we back to the old norm? I don't know. What I do know is it's the nail in the coffin in my mind for the Fed to go ahead and raise interest rates 25 basis points July 26th, the second day of the two-day FOMC meeting. Why? Because wage inflation went up again. That's a problem for the Fed. It's got to stop that in some manner. So the way to stop it is their one tool, interest rates, and I think that's what they'll go with. Then we have CPI coming out later, and as it comes out, the estimates are out. They're looking for 3% or so headline number. That's a low number. But they are looking for about 5% in the core, and that's only down 0.2 or so. It's not enough. So I think that keeps the Fed going too, but remember, we don't have those numbers, so I can't tell you. So how do you handle this right now? Well, I think you have to assume the market does what it always does. The market will look at what the Fed has to do. The traders scratch their head. The naysayers say, they're over. They're done. So they get one more. That's the end of it. And while you were down on Friday, I think they'll be looking to buy the market as they typically do after these events. In the gold market, what does it mean for inflation? That's the big issue that we have. All right. I think what it means is that the dollar will not see a lot more interest rate hikes, and that will weigh on the dollar to the downside, which gives a bit of a bid overall to gold. Now, when we look at a monthly close chart, you're down for the month so far, 0.17, and the same for the week. Why are they identical? Because they began at the same time. That's the reason. When I leave this line on, this blue line that I drew up here, boy, did that turn out to be a fortuitous line in the sense that I thought that would be a big resistance point. If you'll remember, I said, I think it's going to have a lot of trouble there. And it did. Now we're still dropping away. We have downside bias as you're under the 18-week moving average of closes. The momentum is still to the downside. The market's got lower highs, lower lows. There's no buy signal out of that in sight. The market is under the 18-week average. So basis this, not looking at momentum or anything else, the resistance is 1966.90. Get over 1969.80 and you negate the downtrend. But I think the pros, when looking at where you're at, will say to themselves, okay, maybe that's the sell zone off a bounce. But via the fact that the weekly chart is oversold, any reading under 70 when you're not embedded is there, I've got my doubts. As a weekly trader, no, I'm not interested in doing that. You either embed or you correct an oversold condition. Any reading under 20 of any of these numbers, this number or the blue, is oversold. And when it's oversold and not embedded, I tell traders, avoid new trades, deploy money elsewhere. In the gold-silver ratio, we haven't gone very far to the upside. Now, can we close back under on a weekly basis 82.86? If that occurs, then suddenly silver gets a nice bid over gold. All silver has done is challenge the 200-week and the 100-week average. It is in a downtrend. It is not out of the woods, but it's oversold. It spent a lot of downside power to get here. If the market gets back up and over 24.62 on a weekly basis, you're out of the downtrend, but a close over 23.78 does the same. It's still 69 cents away. I don't know that you're going to do that. I don't think new money is going to get deployed in a serious manner on the short side. That's my guess. In the copper, you still have a lot of resistance right here at the 387.90. The market's drifting here in an area that is not oversold. And if it gets up to the 380, let's call it 388 level, I do think you're going to see pros probing the short side in a manner. I'm nervous about that. Why? To get there, you'd have a pattern of lower highs but higher lows. I'm also noticing a market that is respecting the 200-week, that gray line, moving average of closes. In the platinum, as I said last week, I think that was the time that all shorts be covered. You're in sideways market that hasn't proven it can break out to the downside. It's oversold. First challenge of the Bollinger Band, that's the key. Got to learn what I teach in that course if you want to keep up with this. And for the dollar, like I just said, I can see a pattern where if you just take out this week's low, then you've confirmed lower highs. And if you can take out 101.67, lower lows. That will convert the market to bearish. And on rallies, I think the pros start selling it, which takes away one of the headwinds for the gold market. Now, as you keep hearing me saying about these enhanced Bollinger Bands, how do you work with them? How do you work with slow stochastics? My version is different than yours. My numbers won't look like yours. I go in and I modify behind, not where it says, are you looking back 18 lengths or with a 5 and a 3? You know what I'm saying? That's not it. I'm going inside the formula. Now, if you're on TradingView, I sell the suite. So you get the window and you get window envelopes, you get the swing line. You're going to get the moving averages all pop as I do them, and then you just go in and modify them with me. It's pretty cool. And all you do is go to our website under Client Resources at the very top of it, iraepstein.com. Go to Client Resources. You'll see charting, TradingView. Go in, sign up there. We take it the next step. We'll send you an email that we've turned it on for you. That's how it's done. But for the Enhanced Bollinger Band course, which I think is phenomenal, number one, take a look at this. At any point, you can move your cursor up here, give a click, and away you go. That's how you get into it. I'm Ira. You have a good day. I will see you all on Tuesday at the latest, I hope. Fingers crossed. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.